Ken, we have a whole bunch going on with this Federal Reserve raising rates again, fourth time yesterday. For 2022, we got about 3 more meetings to go for the rest of the year. This is one of those bizarre times where everybody's trying to understand, what does that all mean? Why are mortgage rates going down when the Fed is raising interest rates? Let's knock that out of the way first, because that seems to be the most confusing thing that we get. And I'll let you have a stab at that real quick.
Absolutely. So just quick differentiation. The Fed, when they're talking about raising interest rates, that's the rate of interest that banks borrow money between themselves or from the Fed on an overnight basis. So it does not have an immediate or direct correlation to mortgage rates. That's super confusing. Yeah.
Very confusing.
Yep. So yeah, the Fed is trying to provide price stability. It's their main focus or emphasis is to maximize employment, not unemployment, maximize employment and provide price stability. So yeah, we've had 3 rounds now. The last 2 have been swift and severe. We've got a 2-month gap before the next one. But mortgage rates that we live every day, they're trying to anticipate what's going to happen in the future. And the rapid increase that we saw was just the fact that inflation was present. So you have to charge more money in order to guarantee a rate of return if goods and services cost more. So, blah.
Well done. Okay, so mortgage rates peaked 45 days ago, a little over 6%. This is 30-year money. Now we're back down to low 5s. The same time those mortgage rates have been dropping, the Fed has raised the Fed funds rate 1.5.
Yep.
So prime rate has shot up to 5.5%. I'm going to show that slide real quick so we can talk about that. Currently sitting at 5.5, projected to go to 6.75 by the end of the year. That could be potentially higher depending on how some of these numbers come in. This prime rate affects home equity lines of credit, credit cards, auto loans. All of those are going up. And again, mortgage rates have come down. Super, super confusing, but mortgage rates work, as you just said, in anticipation of what they believe will happen in the future. And with that being said, I think we've settled down into this low 5% territory, which is allowing some folks to breathe a little bit. That was a quick 2.5% 30-year fix to 6%. That happened in like 4 months.
It was ugly.
Now we've settled back down to the 5s, and everything is starting to feel a little bit more stable, as you use those terms. Now, specifically for housing, what are they trying to do or accomplish with the housing component where folks are up 35 to 50% rate of return over the last 2 years? What are they trying to do?
They're trying to calm that down and bring affordability back to a level that is good for the economy. So when the pandemic hit and rates plummeted, it brought people into the buying frenzy that maybe wouldn't normally have been there, but the demand got way too hot. And when that took place, rates were too low, and demand would just overheated. So what they're trying to do is to slow that down, have the rate of appreciation mellow out, possibly even reduce a touch, just so that we can maintain some stability and also improve the affordability for folks.
So prior to the pandemic, 30-year money was approaching 5%. Is that correct?
Yes.
Okay, so here we are, we're back to that number or darn close to it. And the problem with that number is the house values are still inflated. And that's the affordability that's getting uh, crushed right now. That's why you're
Yeah.
seeing mortgage and real estate and title and inspector and appraiser and everything's contracting because there's not enough units turning. Pending sales were down 9% this week. That's future looking.
Yeah. And if you look at that pending sales number, if you go back 30 to 45 days, that's ironically when mortgage rates hit near the 6% number. So it's very possible that, that number had a huge impact based on the inconsistency or the increase in mortgage rates or the lack of stability, I should say. We're at 5.5, 6.25, 6, 5.5, 6.25. No, nobody can plan, right?
Well, it locks people up for sure. So they're not refinancing. They don't want to touch their first mortgage if they're below 3.5%. Don't blame them. Don't want them to either. But what folks tend to do is that credit card is just so easy to gain access to. Once you have it and there's a high limit on it, it's real easy to just swipe your way out of it.
It's very easy to forget what the interest rate is that you're paying on that debt. But it's just a payment. I don't know how much of that's going to knocking the balance down. I don't know how much of that is interest, but hey, it's, if I've got $9,000 or $10,000, it's a $225 payment. It's real easy to not look at that statement because they bury it down at the bottom where it shows that you're paying 17 or 18% on that balance that you're not paying down. Oh, it hurts.
All right, so credit card monies, home equity lines of credit monies are going up for the remainder of 2022, folks. Mortgage rates, first mortgage rates aren't necessarily going up anymore.
No, that was kind of when I was listening to the press conference and trying to get an idea of what's going on, but it feels like we may be at a moment of calm, meaning there shouldn't be a lot of fluctuation to the high side, and there's not going to be much fluctuation to the low side. So hopefully this, again, back to that price stability so that consumers can understand it and deal with it in a proper fashion. Hopefully this is the new norm for the next 30 to 45 days.
I love it. It's allowing our buyers to actually look at multiple properties, not feel pressured to make offers. And again, we're seeing massive price reductions all across the country. That's going to continue to happen. Does that mean values are dropping? Well, that's going to take time.
Yeah, that's going to be sporadic, right? Different markets are going to have different environments.
Yep.
I saw something, I followed along with a presentation out here in the Valley, and they speculate that most cities in the greater Phoenix area are going to strike a balance between a buyer's and a seller market very, very soon. So yeah, increased inventory and that stuff is critical because of the affordability. The cost of owning a home from 2020, and this is in general, to right now is up about 80% when you look at the median factors, meaning the median home price from 2020 to 2022, the increase in interest rates, that's somewhere between a 75 and an 80% increase in cost of shelter on that median price. So we just need to see a little bit of softening.
Yep. No, so pay the credit cards, guys. Try to curb your spending a little bit as you start to hear, you're going to start to hear some a little bit ugly news in the mainstream media. Earnings reports are coming out, guys, for all these large companies. Tech is doing some layoffs. So people are feeling a little bit funny from the job stability standpoint. I get it. their monthly budgets are being basically attacked by the gas prices and the grocery prices, the cost of goods. So hang in there. Fed's doing what it doing what it can do, which is following this path.
Yeah, so that,
go ahead.
sorry to interrupt there, but that was the other thing. If we look at it, so yesterday, all of the stock markets rallied, meaning that the market indexes went up. Mortgage rates eased up. So that was positive news from both the equity markets and we'll call it mortgage or bond markets. What that means, I believe, is that both markets and the people that are hedging what's going to happen in the future, they feel sound or solid that the Fed is doing the right thing and that they're taking the proper course to curb inflation. So in all of that chaos, even though rates went up, that was the good news or the silver lining in what happened yesterday.
I love it. We'll leave it there, guys. If you're watching on YouTube, subscribe to our channel, please. And we go live every Thursday at noon Eastern, and we appreciate all your wonderful feedback. Take care, guys.